All right. Weekend's over. Time to get back to work tonight. Tuesday right around the corner. End of the month. Always a great week to be a trader. Welcome back, guys. Hope you guys had a fantastic weekend, but it's about that time of day again here, isn't it? Monday evening. It is September the 27th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it is great to have you with me. My job tonight is to help us find the best trades, setting up for tomorrow. That's Tuesday's trading session. Got a great video in store for you guys tonight. Got some charts all ready to go in the background. Emini's here, Nasdaq's here. The gold is always here. Glad to see you are here along with me. I got some ranges on the charts here tonight. Got some pretty big moves though, right? Big move down the S&P. Big move down in the Nasdaq. Got the gold chopping around a range right now. Range-bound markets are one of my favorite markets. We're buying low. We're selling high. We're trading those failures back and forth with rotation. And, of course, we're looking for breakouts, right? To get some big news tomorrow. Maybe some nice big breakouts on our radar for tomorrow. Not to worry. By the end of this video tonight, you'll know my favorite trades for tomorrow. You'll also know some stuff to avoid to keep yourself out of trouble and keep yourself in the green, whether you're trading with us tomorrow or you're trading on your own out there, whichever one of these markets is your favorite. Before we jump into the video tonight, before we jump in, I want to make sure to remind you, make sure you subscribe to this YouTube channel. I publish my favorite trade ideas every evening on this channel. Don't miss tomorrow night's video. Hit that subscribe button there. Hit that bell icon so you always get notified every time we publish something new. If you have any questions for me, drop those questions in the comment section. I would love to answer any questions. Don't be afraid to ask questions. And as always, if you guys enjoyed this video, if you tune in every evening, hit that like button, hit that thumbs up here for me. Really appreciate you guys carving some time out. But don't forget to subscribe. We're going to keep doing this all week this week. I don't want you to miss tomorrow night's video. But enough of tomorrow night. Let's get into tonight's video, though. Intro is out of the way. Let's get ready for, big week ahead of us, right? End of the week. Always a great week to be a trader. As you can see, get a bunch of ranges right now. There must be something they're waiting on here. Yeah, there is. We get some big news tomorrow, some big news throughout the week here this week. Definitely seeing some ranges right now. Ranges are really simple. They're very easy to trade. What you want to remember is that ranges act like magnets. So the magnet's right in the middle, and what you want to do is, find levels of support, for example, right, and buy back into them. Buy support levels below the range. Find resistance areas above and sell those resistance levels going back down into that trading range, right? So we're buying low, we're selling high, and we're looking for breakouts. There are 3 different types of breakouts I'll be watching for tomorrow. So we're going to talk about those and kind of how to apply them tomorrow as well. So I've got a lot to cover here in this video to make sure you're ready for tomorrow's trading session. Boy, speaking of tomorrow's trading session too, let's make sure we take a look at the calendar for tomorrow, because we do have some pretty big news coming our way here as we go into the end of this month and get into the meat and potatoes of this week here this week. Of course, we are looking at the end of the month, right? End of the month is always expected to be a little more volatile, okay? We expect to see some scarcity effect come into the market. Anybody who's managing other people's money, they know they have to get their numbers looking good by the end of this, basically by the end of the day on Thursday, right? So if you're working for a big trading firm or a prop firm, your feet are to the fire here right now as we go into the end of the month. At the same time, you can probably imagine, right, if you're way up on the month, and we've had a pretty good month in our trade room as well, if you're playing with house money right now, it's pretty easy to get a little bit lazy with your rules, right? So we tend to see people over trade into the end of the month. We tend to see people really get, again, that kind of scarcity anxiety trade into the end of the month, and that usually means some more volatility as we go into the end of this week. So keep that in mind as we go. Now, looking at tomorrow's trading session. Tomorrow, of course, is Tuesday, the 28th. You're not going to see this on the calendar, but tomorrow we've got, let's talk about it. We get some big news tomorrow at 8:30, right? International trade at 8:30. We get some consumer confidence numbers at 10 a.m. Eastern time. The big news tomorrow, though, hasn't actually popped up on this calendar yet. We have Powell tomorrow, and most likely on Thursday at 10 a.m. Eastern time. Now, I'm not sure why a lot of the news calendars aren't showing this right right now, but I've confirmed this on multiple different resources here. The week after FOMC, right? Last week we had the FOMC. The week after the FOMC, generally speaking, we have the 2-time-a-year testimony that should be happening tomorrow at 10 o'clock. We get Jerome Powell. We got Janet Yellen. They'll be testifying in front of the Senate Banking Committee, I believe it is tomorrow. And then I believe it's the House Oversight Committee is going to be on Thursday. So tomorrow's the big one, right? Tomorrow's the big one there at 10 o'clock Eastern time. Now, the reason why I bring this up is because tomorrow morning in our trade room, our goal is going to be to find the trades before he starts speaking, kind of wait for the market to kind of settle in a little bit, and then look for trades after he starts, after he starts. This is not like the FOMC announcement where the market goes crazy. It may go crazy. It may go a little bit wild there around 10 o'clock tomorrow, but be aware, right? You're not going to want to sleep in tomorrow. Get to your desk early. Get those trades done early. And if for some reason we can't find anything before 10 o'clock, we're going to look at that 10 o'clock area as kind of a potential sit on hands, and then we'll trade the reaction to it 10:15, 10:30, 11:15, 11:30 tomorrow morning. So we are anticipating there to be a little bit of a pause there at 10 o'clock Eastern time. Now, at the same time, we may not notice much at all. As you can see, they haven't published this yet. He will be testifying tomorrow, though, at 10 o'clock Eastern time. You'll be able to see it on the on their Fed.gov YouTube channel. But nonetheless, though, tomorrow morning, early in, get those trades. Look out around 10 o'clock, see what happens 10 o'clock, and then trade the reaction after he speaks tomorrow. Don't forget, guys, we're going to be in our trade room 8 o'clock Eastern time, like we are every morning. I would love to have you there, right there with me. I'll put all the membership links to come out and trade this stuff with us. Our advanced membership information. I'll put all the details below this video tonight on the website or in the description of this YouTube video. We got more big news coming on Thursday and Friday, so make sure you stay tuned for the rest of the week here. Tomorrow could be one of the more difficult days. That 10 o'clock testimony slapped right in the middle. I'm always pretty optimistic, though, in our trade room. We'll trade whatever the market gives us. Let's get back to our charts, though, here, because, we got some news tomorrow, 10 o'clock news, but everything we need is always right here in front of us on these charts of ours. Got the S&P, got the Nasdaq, and, of course, got the gold all ready to go. Bunch of ranges here right now. Why don't we start off with the S&P? And, of course, what's the biggest takeaway right now on the Emini? The big takeaway right now, of course, is we are bearish, quite bearish there into a trading range. Again, whenever we have a range-bound market, my job is to find support levels below, buy back up, find resistance levels above, sell back down. If you were to look at a little bit bigger picture, you'll quickly notice we kind of picked up where we left off last week, right? You'll notice one big range there. Again, this is a bull market range. Buy at support, sell at resistance, right? Buy at support, sell at resistance. So it's a relatively simple plan of attack here right now. So we know the kind of the general idea of how to trade a range. I've got some great levels of support marked up just underneath that range, levels of resistance above the range as well. You'll notice I have the number 1 on here, and this number 1 is going to be relatively important. You're going to see as we go through the rest of these charts tonight, this is the only market that doesn't have a number 2 on it, and I'll talk about why that's important here as we go deeper, not just the S&P, but as we go deeper into the Nasdaq and the gold here. So make sure you watch the entire video tonight because, again, you're going to learn more about kind of why that's important and kind of what that means for our trading strategy or trading plan for tomorrow. So how do we trade it? How do we buy low? How do we sell high? Well, let's say, for example, we go lower, right? If we go lower here right now, I'd like to be a buyer down in this, right, in this area here. The only problem we have is momentum. Momentum's very bearish at this point because, of course, we have all of that momentum coming down off that high. The way you want to be a buyer in an overall bearish environment, because again, we know we have a range above us there, is you want to use the 2-try rule. You want to wait for the bears to try twice, once and twice. Think about where their stops are, okay? And just wait for that nice strong signal and just buy right into those stop losses. That's kind of the simplest way to think about trading at support levels below a trading range. Now, if this is a bull market, I wouldn't need those bears to try twice. I would only need them to try once. But because, again, it is such a bear market right now, take out that low. It might go all the way down to this area too. So just be aware of that, right? And then, of course, wait for those bears. Try once, try twice. Now, here's one more follow-up trade I'm always kind of looking for. Once we know where those stops are, all right, and we know we can now buy going back up into that trading range, this failure setup, which we call a failure pattern, oftentimes runs higher, and then we can grab another channel, draw off the highs, mark off that low, and then, as I always tell you guys and all my clients in Trade Room, I want to grab that first pullback, that first test of the low of that channel, all right? It's a failure pattern, and then it's not a pullback pattern, but it's a pullback. It's a first test off the low of that channel. We'll talk more about entry patterns here as we get deeper into this video, right? So again, failure into that first kind of pullback, right, as we go. Now, there are a lot of variations of this, and I'll be giving away some more variations of this as we go deeper into this video. So again, make sure you stay tuned and watch the entire thing tonight, because there are a lot more ways to trade that, which I'll be kind of giving away more of those secrets as we go deeper into this lesson. As we go lower, here, could I sell down here? You definitely can. You have all of that momentum, right? All of that momentum running lower here. So if we get a nice strong move down, a shallow pullback to the moving average, a lower low in price, I can definitely start picking off what we call traps, right? Trap entries off of that high. Now, one of my favorite techniques in these trap entries is to draw a trend line off of those lows, bring it up around that high, and try to combine that trap entry off the high of that channel. Just so you know, that's what I'll be looking for tomorrow as we go lower here. Now, here's the key. You're going to want that trap entry either before we retest that 10 and 3/4, or they're going to have to get a real strong break down and then get it down here. All right, because you're not going to want to take that trade, obviously, into that major area of support. Another thing to keep in mind too would be, let's just say, for example, the market simply tumbles and runs right down to that low. But instead of the bears coming in and trying once, trying twice, and jumping back up, like I've mentioned a couple times already, now those bears come in, they hold the pullback, and they blast off the moving average. What do we call these? We call these breakouts. This is one of the 3 types of breakout patterns we'll talk about in the video tonight. I call it a 1, 2, 3 breakout. It's a 1, 2, and 3. Now, keep in mind, I'm not going to sell that first pullback, again, because you're running right into that major low. But if I can get that 1, 2, 3 move and then get that low, mark up that high, I would love to drill down and get the entry off of that low. Now, let's talk about entries, right? Because remember, keep in mind, this is a 9,000 tick chart right now. Not the best chart time frame to get entry signals. If you're looking for an entry signal off a 9,000 tick chart, it's good for the big picture like we're using right now. But as far as the actual entry signals go, I always like to drill down to a faster time frame. It all depends on which market I'm trading, right? The time frame will be different for the S&Ps, it will be for the Nasdaq. And my 2 favorite kind of price action setups, I'm not a big fan of indicators. Indicators are a little bit too lagging for the entries. My 2 favorite entries here are what we call traps and failures. Now, guys, I'm not going to go over all those details, although they are very important, but this video will already be long enough here. What I'll do tonight, though, is if you want to, I have probably hundreds of examples of traps and failures and how we drill down to a faster time frame. It's all included in our Quick Start class. We have a great free trading class, our Quick Start course. I'll put a little button for you up there in the upper right-hand corner. And I'll tell you, if you're looking to earn daily income, get consistency in these financial markets, if your goal is to earn income in these markets right now, that Quick Start class will teach you my 3-step strategy, the same strategy we use every day in our trade room to find the 3 to 5 best trades every day with all of our members. On top of that, I also give you guys a lot of examples of how we apply our favorite price action setups to our favorite markets, right? Like the S&P, the Nasdaq, and the gold. So again, if you're serious about your trading career, if you're willing to put a little bit of effort into it, that Quick Start class will really bring you right up to speed and give you a great roadmap to follow, or show you kind of what it feels to trade with us every day in our trade room. So I got a pretty good plan now. We know how we're going to trade this as the market runs lower. And again, I'm just covering the basics right now. I'm going to go over more variations of this as we go deeper into this video. How about if we go higher here? Now, if we go higher right now, remember the big problem we have right now going higher is we're very bearish, right? So if we go higher here, what can I do with this right now? Well, here's what we can do. We got to talk about the 2-try rule. I mentioned earlier how we only have number 1 here. What's going to happen is whenever you see a real strong move down, you're going to have the bears going to try a couple times. I talked about how the bears will try once, try twice, and back up here. This is kind of a bigger example of that right now. So what you're going to see in the Nasdaq and the gold is that you're going to see probably a lot more bears coming in above those highs. Right? They're going to try to run this thing back down again. That will be 1 try and 2 try. Okay, they're due for it. They're due for it. So yes, we can look for a short up above those highs. And yes, we can definitely look for a breakout and a reversal going back up to retest those major highs. Now, how do we sell it as we go lower, right? Or as we go higher here, right? As we go higher, how do we sell it? Well, the first thing you want to remember is there's going to be some rising support coming over here. That's the biggest clue. Okay, that's a very important clue. Why? Because as you can see here, if I try to go in and use my, well, look back here, look back there, right? See what happened? Had that big move down, they pop up, the buyers try to buy the pullback, and they fail. One of my favorite short setups, a failure setup. Okay, there are a lot of examples of that price action setup in that free trading course, like I mentioned earlier. But I'm getting off track here right now. If I do the same thing, if I look over here, look right now, if I try to buy, if I wait for the buyers to fail now and I sell into the, yeah, right, that's the concern. Now, maybe you're thinking, well, I'll use a small target. Here's the problem though. We can't just say we'll use a small target because there's not a lot of reward for the risk that has to be taken. That means professional traders, the people who actually move these markets around, are not going to take that trade. They're not going to be interested in that entry. Most of the time what will happen is you'll have to wait for a trap. You'll have to wait for what we call a trap entry. Okay, traps are my favorite setups whenever I'm worried, like in this example, about selling into an area of support. Does that make sense? Right? If it does, hit that like button for me. If it doesn't, drop me a comment in the comment section. Let me know what's not making sense, and I'd be more than happy to do a video on it as we go here, right? But that's the problem. The problem is, and again, you're going to see how this looks on the gold and the Nasdaq as we go deeper in this video, and you'll see how this all kind of makes sense here, right? So that's how we're going to sell it as we go higher. And there's a very good chance those bears take it lower. And if they can take it lower, right, get that run going lower here, remember, mark up that new channel now and look for that first pullback. That first test is always very reliable, right? It's pretty reliable, right? So I want to get that failure with that trap, and then to get that pullback going lower. All right. And then, of course, at that point now, the bear is trying to get back down to retest the low. How do I buy it as we go higher? Well, we talked about the 1, 2, 3 breakout pattern, right? We talked about the 1, the 2, and the 3. You know, we talked about that going lower. That's one of my favorite breakout patterns. I'm not going to buy the first pullback. The same reason why I wouldn't buy that one. I wouldn't buy that one, right? We're going to sell into it instead. But the buyers do hold it. Then I can mark up that high. I can mark up that low. And now I can buy. You know, again, I'm simplifying this right now, but you'll see a lot more, you know, real examples of how we apply these setups in that quick start class I mentioned earlier. So we get that 1, 2, 3 reversal, 1, 2, 3 breakout. We buy that first test. Maybe it's a failure pattern. Maybe it's a trap setup. Maybe it's a pullback setup. I don't know. We'll have to wait and see what we get once we get there. Here's another one to keep in mind. As the market jumps higher here, right? Think about jumps higher, really rips higher now. Now, think about the first pullback, barely pulling back and going higher. If we see something like that, remember, this is a little bit different, right? It's a very strong first leg, a shallow pullback, and a higher high. That trap low, bingo, that trap is money. Okay, that's one of my favorite trades right now. We call these 2-try traps. And of course, my objective is to go back up to retest those highs. All right, guys. Now there's one more breakout pattern. We'll talk about that a little bit later on in this video. So if you're serious about learning this stuff, make sure you tune in and stay tuned for the entire lesson tonight. And of course, again, I cover all these details inside that quick start class. So now we know kind of how to trade this stuff as it goes lower, as it goes higher. Want to keep going? S&P's to go. Let's get the Nasdaq here. Now, Nasdaq, you'll notice, is very similar to the S&P, but you'll probably right away now see exactly what I'm talking about, what the big differences here are on the NQ, right? We have this big move down, and of course, it looks like there's a range right in the middle. Now, it would be a good idea to kind of zoom out a little bit, kind of see where we are here right now, get some major levels of support down there as we go. That range right in the middle, of course, is going to be a magnet. It's going to be a magnet. So what do? We find levels of support below. We buy levels of support. What do? We find levels of resistance up above. We sell levels. Well, hold on though, right? Is that going to be a smart place to get short? Didn't we talk about this too again, right? So strong move down. The bears have tried once. The bears have tried twice. So if the market runs, what do you think? Is that a good idea? Probably not, right? Probably not going to be a very easy way to get short. And so if this thing starts to go higher here, I'm looking for the long side here. I'm looking for the long side here as we start going higher here. So really, when you think about it, the sellers, they've got really one more shot right now. If they can't get this thing to get those lows taken out, beware. The buyers are going to have they have potential to grab control of this and make a big run going right back higher again. So a lot of important clues on this one when you see it kind of compared to the S&P, right? So, okay, so how do we trade this thing right now? Very similar, range in the middle, magnet. But again, there's that trend line coming in. Right? So wouldn't surprise me if we see it go up, buyers once, buyers twice, trap, and back down again, right? We talked about on the S&P. Now, can I buy this trend line? I definitely can, but I have to look for, what's the problem going to be? Yeah, the problem's going to be this range. Ranges are not really very friendly for entries, especially if you're trying to use a small stop loss like I am. My specialty is helping new traders use small stops, small risk for big reward trades. Help them start earning that daily consistent income in these markets. And so if you're looking for consistency in your trading inside a range is the last place that you want to look. So how would we buy this? We would buy the trap, right? Traps are always going to be your best friend whenever we're worried about buying either too, like this one, too high, right? We're buying too high here. So a trap would definitely be what is looking for here at those lows. Now, we may not get the trap. Let's be honest. We may not get it. The market may bounce off it and rip and go higher here. I'll talk about how to trade that here in a moment. What if we make a run lower? What if we make that run lower? Can I buy now? Absolutely, I can. In fact, this is a great spot to be a buyer. Off this swing. I mean, after all, there's a big move down. Anytime we see a big move that separates away from the moving average, it creates what I call an open loop. An open loop is like a metaphor. It's kind of a hidden meaning behind it. It basically means unfinished business. The bears are going to try to keep on trying to retest that low. They get the second try right now, and they've really got to get this thing going before they fail and this thing rips higher here. But if we can take the lows out, or we take this, this area out, what's my challenge? My challenge is momentum. I love the fact there's a range above us. Love that. That's great. But my problem, of course, is momentum. And so how do we absorb momentum? How do we buy when the market is so bearish? We do something like that. We wait for that breakdown. We wait for the bears trying once. We wait to try twice. We rope in all those bears, and we simply hit them right into those stop losses. It's not rocket science. You don't really need any special indicators for this besides the moving average. And I go over all the details, of course, in that quick start video I mentioned earlier. So as we go lower, right, whether it's here, or really just even a little bit below that low, I do still think that 1, that 2, find those stops. Okay, you know exactly where the stops are at that point now. And now, of course, I can buy into those stop losses. I can mark up a new channel, mark up that high, mark up that low, and repeat after me. I can trade the rotation. What do I mean by that? I mean the amount below the range, I can now move above the range, right? That becomes an easy target on the other side of that range, right? So we take out the lows, we let the bears try twice. Okay, if we're successful, the market runs higher. We then pick off that first pullback. And again, I say pullback, right? Don't take that literally. We're going to drill down to a faster time frame. And once you take that quick start class, you'll know how to trade a failure, a trap setup, a pullback entry, a strength move coming off that channel. Lots of ways we can trigger the entry, right, to actually get into that trade for tomorrow. And then again, trade the rotation. Okay, rotation. Mark the low, measure the amount below, measure the amount above. That's where we put our final target for that rotation going higher here. Now, as we go lower, can I sell it? You absolutely can sell it. Absolutely can. But what's the problem, though? Yeah, we're at support down here. So, of course, I'd have to go lower. I'd have to pull back to the moving average, get the bears to come in and jump off the moving average. Yeah, didn't do it there. They didn't do it there. Will they do it here? I don't know. Your guess is as good as mine. And with the big news tomorrow, who knows, right? Who knows what's going to happen here? They could easily run lower. The bears churn up the lows, and we pop right back higher again. That's what I kind of hope happens tomorrow, but we'll see, right? 1, 2, 3 breakdown. What do? You mark up that low. You mark up that high, and you get aggressive on that first pullback. The first test is always the best test. And of course, we'll know what type of entry pattern we're going to get. Oftentimes what will happen is you'll get that strong run down. The bears will come in, they'll hold the pullback, you'll run it lower. Now you know this range is no longer a magnet anymore. They're hunting for the big round number. More importantly, they're hunting for that major low at 14,960. At that point, now I can mark up that new channel. And oftentimes, we'll go just above the moving average. It'll be a failure into a pullback combination setup. You'll learn all about combo setups in that video class I keep mentioning. But again, looking for a price action signal coming off the high of that trend line. And again, we get a big juicy low there at that 14,950 as we try to go back into that range, just about 15,000. That's how we're going to buy it and sell it as this market goes lower here. All right, how do we buy it as we go higher? That's one of the big kickers, right? How do we buy it as it goes higher? We talked about the trap, right? Going long. Let's say, for example, let's just, I'll kind of indulge on that scenario. What if we bounce off that, right off of that low? This one's pretty easy, okay? Think about it this way. 1, 2, go. Mark up that new channel. Buy that first pullback. Again, first test is always the best test, right? I wouldn't be too keen on buying the first one there. That wouldn't be really as reliable. Why? Because the range is right there. Same way we're not buying this pullback right there, right? Or this pullback right here. Remember, the range is not a good place to be trading. Trade below the range, go back into the range. Trade above the range, going back into the range, right? So if I can get that 1, 2, 3 bounce off the moving average. And again, I know, we all want to get that first pullback. Believe me, I hate to watch the market go without me too. But, remember, we're not here to grab every single move. We're here to get into the most reliable setups. Again, if your goal is just not, if you want to gamble, then do whatever you want. You shouldn't even be watching this video right now if you're just gambling this stuff, right? But if you seriously want to earn daily income, make this career, you got to put yourself in the highest probability trades, right? The ones that have the most likelihood of working out. And so, of course, 1, 2, 3. Now that's a very reliable entry point. Now, of course, we'll have to trigger the entry tomorrow, drill down, see where it puts us, right? But that's one of the ways to do it. And then let's say also, too, let's say it really rips and runs higher, right? We talked about that strong move up, shallow pullback, higher high. We talked about how valuable those traps are. And sometimes, guys, what will happen is it'll go like this. It'll grind like this, right? It'll grind, right? That's fine too. Just wait for that trap, right? Wait for that trap. In fact, these are pretty common, especially with this big move down. What do we call those? Back in the old days, we called them short covering rallies. Nowadays, all the kids call them what? Short squeezes, short squeeze, right? Short squeeze. All the bears are caught. They're getting squeezed out of their positions. And the market oftentimes in those situations, right, they grind higher. And as they grind higher, the reason why they grind higher, guys, in case you're curious, is not because of buyers. It's because of all the sellers getting out. That's why it grinds. In fact, one of the easiest giveaways of a short squeeze or a short covering rally, if you're old school, right, is that grinding. It's the bears getting out. We don't need buyers to move it up. The bears get out. The bears have to buy to get out, right? So that trap will be a great entry as we go higher. And then one more thing, right? I've been kind of dangling this final breakout, final reversal for you here. If I mark up these highs right now, the market may easily jump up and then slice, right? Slice back down in. If that happens now, that's a little bit dramatic, Joe. Market jumps up, right? And then, of course, slices back in, comes back to those areas of support. These are very common. We see that reversal now. Remember, the bears have tried twice, right? Now what you can do is trap in those bears, and pardon the scribbles right now, trap in those bears, get those bears to come in, try to get short. It is not a bear market any longer, though. Not a third try, right? If it goes up here, this is not a bear market. It's no longer a range anymore either, most likely. Now we get that strong pop. Okay, that confirms this one try, two try now is in. They slice back the moving average, trap in those bears, and hit them, right? This is a very, very common failure into pullback combination, right? We wait for the bears. We're not trying to predict that pullback, right? Because it slices below the moving average, right? Get under the moving average, wait for the bears to commit to it, and you'll learn more about what I mean by how I define commit to it in that video class, and then find that first pullback as well. Failure into pullback combination. Where's my target? It's an easy one, right? Back to those 400 highs there. So as you can see, there is no shortage of tradable opportunities tomorrow. Remember, we're not just here to trade what's moving. We're here to trade what's moving and is consistently reliable. That's the most important part about this. If you want to get consistent income in these markets, you got to trade setups that have consistent results. And that's what I'm trying to teach you guys here in this video. Let's wrap things up right now on the gold, shall we? Gold is, shocker, it's a range. And this is what definitely tells you something's coming, right? When gold's all coiled up like this, one thing I didn't mention in the news analysis earlier on in this video. I wanted to keep it relatively short early in this video, getting the good stuff. But one thing I didn't mention in the news analysis is on Friday, we have a scheduled government shutdown. There is a big deadline for basically Thursday, right? And this is nothing new. This is nothing new, guys. So if you're relatively new to the markets and you're hearing things about, debt ceiling, and, government shutdown, this ain't the first time. This will happen a few times a year, right? The infrastructure, don't call it a stimulus bill, right? They're still bickering about that, even after COVID's almost gone now, right? So it's like, so they're still bickering about that, right? So all of this is supposed to be kind of, approved and voted on by Thursday afternoon. It'll get done. I'll tell you right now, though. Remember, this is nothing new. Okay, you're going to hear about debt ceiling and government shutdown at least once a year. Okay, and every time it's a nothing burger. Okay, they try to whip it up and make it all this big thing, and all it is political theater. Right, the same stuff we've been seeing the last 5 or 6 years. Right, so don't let it spook you. Now, does that mean that gold might be a little bit pins and needles the next few days? Yeah, and with Powell on the microphone, Powell testifying tomorrow, Powell talking about monetary policy. So, okay, if there's one market here that definitely, you can feel its kind of anxiety a little bit right now, it definitely is gold. Gold, though, as you can see, is no different, right? There is very little difference here. The one big difference is gold does not have that big move that the S&P and the Nasdaq have right now. But you notice they do have? They got the 1 and they got the 2, right? They got the 1 and they got the 2. You'll notice they had that big move down, remember late last week, right? Had that big move down into that trading range. What do? You find levels of support below. You find levels of resistance above. You buy low. You sell high. You trade the failures. How many times have we talked about that so far today? At the same time, with the bears in control momentum right now, they've tried once. They've tried twice. This is definitely a good potential now for these bulls to grab it. Now, again, we might be a bit subdued tomorrow on the gold. If I had to guess right now, I'd guess gold might be the more difficult market until we get kind of this debt ceiling, government shutdown thing behind us here this week, which again, they will get it done. They will get it done. It'll miraculously all come together, right? Like it always does on Capitol Hill, right? They're trying to whip us up. They're trying to whip things up though to get political power. So bottom line is, as we go lower, we're buying off that low. As we go higher here, rising support trend line, right? Like not easy to be a seller as we go higher. Could the market turn around and go lower? Absolutely. Anything is possible. What I'm talking about is where the most reliable trades are. So as we go lower, what's the plan? It's very similar, we said already so far, right? Let's get down to these lows. Let's take out some of these, right? Some of these support levels. You'll notice I've marked up the amount above the range, down below the range. Remember, ranges are balanced. Trade the rotation back and forth here. So as we go lower, how do we buy down here? Are we going with or against momentum? We're going against, right? Remember that big move down? Yeah. So if we go lower, great place to be a buyer. Great place to get long. You're at support below the range. But what's the problem? Yeah, the problem is momentum. That's okay. Let the bears try twice. Try them once, right? Trying twice. Once they try twice, the stops are above. We can buy right into those stops. And then remember, trade the turn, right? Trade the turn. Grab that turn and go. You can see kind of an example back here, right? Where they take out that low, the bears once, the bears twice, they rip higher, and then again, there's that first pullback. It's always pretty, right? There's your first pullback, right? Trade that turn. Same idea we're looking for over here, okay? As the market rolls lower, how do I sell down here? Very carefully, very patiently. We definitely don't want to get caught, right, trying to sell that breakout pullback, that's for sure. But if they can take out that low, if they can hold that pullback, and if they can jump off the moving average, there's no reason why I can't sell this thing as it's going lower. We actually have quite a bit of open space down here to a big juicy target at 1718.5 down there. We just have to see some proof. We got to get this price going down to the low of that range. Get those bears to show us they actually mean business and they can hold the breakout right now. Once we get that 1, 2, 3 breakout, then again, mark that low, mark that high, drill down to your faster time frame. You'll learn the best ones in that quick start class. Grab your failure, grab your trap, grab your pullback setup off the high of that channel. Or, remember we said earlier, right? Strong move down, starts to grind. That's also a breakout. It's a little more difficult to trade because a lot of times those grindy moves, they're not very convincing. But what do you do when the market grinds like that? We call those runaway markets. You look for traps, right? And those traps will oftentimes come just around the high of a new kind of hidden channel, right? Or a spiking channel, as it's called in our video classes. So if the market really grinds lower here, right? Grinds. We call those runaway markets, right? Remember, very different between a strong run down. Okay, strong run down, 1, 2, back up again. But if this would have gone lower and kept on grinding, you can almost guarantee the first time this thing pulled back, the bears would have whacked it, right, and ran that thing going lower. That's what I'm looking for here, right, as we go lower. And again, same kind of basic strategy we've talked about a few times already here. So I won't go over it again here on this lesson. But again, we'll cover it tomorrow morning in our trade room. Can I buy this trend line? I definitely can, but what's the problem? I don't want to trade the middle of this range. This is one of those scenarios where it's going to be difficult to find an entry, right, going into that, off that trend line. What I'd love to do is the bounce going higher, get that bounce off that trend line, get those buyers to come in and hold that pullback. They didn't do it here, didn't do it there. There's no guarantee they can do it here. But if they can hold that pullback now and run higher, bingo. Now mark up that high, mark up that low, right? Drill down and hit it. I always tell my clients, you can't rely on this one, but your job is to get in on that one. That's the good one right there, right? That's the 85, 86%er right there, right? It may not go forever, but almost always goes back and retests that, right, that interim high. And that's all you need as a day trader. You take a small profit, remove that risk, let the rest run. If it does keep running, 1775, 1776, good targets there up overhead. Remember, don't forget too, in this case, because we got one try, two try here, the bears may give up on this. Maybe it jumps and starts to grind, right? Starts to grind, just buy that trap, right? Buy that trap. Let's say it just rips. Let's say it rips and runs higher here. What was that third breakout we talked about? Yeah, kind of a breakout pullback, right? Rips higher. It slices below the moving average. Bears try to come in and get short on it. Oh, no. Remember, strong move. Anytime we see a strong move, the odds are very good they're going to retest that high. Wait for those failures, right? Wait for those bears, buy into those stops, and grab that pullback as we go. Again, same thing we talked before on the Nasdaq. Strong run up, really sharp pullback, trapping those bears underneath the moving average, and then go. Right? The failure into that pullback combination as we're going. Could I sell up here? What do you think? How would I sell up here? Could I sell? You definitely can. But the reality, again, is you're playing with fire. One try, two try. But, I should mention, though, the markets can do whatever they want, guys. Remember, I can speculate all I want right now, but the market loves to go, oh, really, Joe? You think you got this whole thing planned out, huh? How about this? And they'll give you some different variation. And that's why our trade room is so valuable, because, we kind of deal with the uncomfortable changes in the game plan throughout the entire session. I'd love to have you there with me tomorrow, by the way. I'll put all the membership information in the description of this video here. I'll also put a big button for you on the website as well. Let's see here. As market goes higher, what's the problem? What's the problem now? The problem is you've already tried twice, bears. That's the problem. Right, that's a problem. What's the other problem? The other problem is rising support trend line. That's a problem. Yeah, a lot of problems here. Great spot to be a seller, though. Why? Because we're at resistance above the range. This is just the S&P. Let those buyers try once. Let them try twice. I don't trust it. I don't trust it, especially after the bears have tried once, tried twice. That rising support trend line for me is a killer. That rising support trend line, what it does is it gives the bulls a feeling of invincibility, especially if the bears have tried twice. Does that guarantee a reversal? Of course not. Of course not. What it does guarantee, though, is that I've got to really respect the bulls right there. Let them try once. Let them try twice. Grab that trap, if at all possible. One kind of variation of this, and then we'll wrap things up here. One variation of that would be, let's say it goes one, comes down, then you draw that trend line off that low, off the high, and then two right there. You don't always need the trap. If you can get a really wide, almost flat channel right there, right? There's your one, there's your two, you know what I mean? Same basic idea. You're trying to sell as high as you can. That way you're not selling right into that rising support. And then don't be afraid. Once this thing starts to rip going lower, grab that new channel, drill it down, and hit it. Because the bears come in and grab it again, right? We grab that turn, and really the only thing that matters is just make sure you're not doing it right in the middle of that trading range. Now, of course, again, as I mentioned before, tomorrow morning, all hands on deck, 8 o'clock Eastern time. Got a great plan of attack all ready for tomorrow. I would love to have you there trading right along with us. What I'll do again, I'll put all the membership links you guys need. Don't be afraid to call the office. I can always go over the different membership specials and things like that. So don't be afraid to call the office on that. I've got all the details there in the description of this YouTube video. But keep in touch, right? You get a good game plan for tomorrow. That should get you going in the right direction. And you know where to reach me tomorrow morning, 8 o'clock Eastern time in our trade room. Hope I'll see you there right along with us. Any questions, drop those comments in the comment section. And of course, as always, guys, we'll see you guys, if not tomorrow, we'll see you guys tomorrow night on the next edition of our nightly newsletter. My name is Joseph. Thanks for tuning in tonight. Don't be afraid to share this video with a friend. As you can see, lots of value here for somebody who's serious about a trading career. But that's it for me, guys. I'm out of here for now. Have a great rest of your evening. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye for now.